Uber reporting weaker than expected gross bookings for the third quarter and providing a gross bookings forecast for the fourth quarter with the lower end of the range below expectations. Now, Uber did post record operating income at just over $1 billion during the third quarter. The shares, though, down 7%. Here with some reactions, Steve Jang, founder and managing partner of Kindred Ventures. It's an early-stage venture capital fund that focuses on AI and deep tech. And Steve was an angel investor and advisor to Uber when it was founded in 2009. Still a shareholder as well. Steve, thanks for being here.
Thanks for having me.
So we see these bookings numbers that maybe were a little weaker than estimated. That said, I mean, the shares are up like 29% this year. So I'm curious how concerned you are about the bookings outlook that we're getting.
Sure. I think the company is starting to show that it's not just a marketplace company, but it's a software company. It's profitable. It's profitable through growth right now, which is what the target has been since IPO. We're showing a 10% net operating profit margin right now for the company. That's really strong. I think the summer seasonality and some of the prior growth from the prior period might be changing some of the numbers quarter over quarter here, but the opportunity is still ahead. And I think, one of the big topics at large is, what's the AV and EV opportunity, the autonomous vehicle, robotaxi, and electric vehicle opportunity for Uber. So that's still ahead of the company. They're also still right now working through a lot of the scalability benefits that they've received just by being cost conscious and focusing in on applying their software as a network to ride sharing, delivery, and freight. So I think we're just at the beginning. These things are operating on cycles. So we're still very supportive and bullish on the stock.
And so with that in mind, I mean, those could be the next major catalysts, both for cutting down some of the costs per mile and at the same time providing a new way of sustainable mobility as well on the autonomous and the EV front. How much of a lead time, how much kind of time or cushion did investors or should investors give Uber and perhaps even some of their counterparts within the industry until they start to kind of sour on the position and question whether or not they can actually bring it to fruition?
Yeah, so it's an ecosystem of companies, right? It's not just one company. Uber is the demand network, and their opportunity is to really capture not only increased demand for AV and EV rides, robotaxis, but it's also an opportunity for these AV and EV companies like Waymo, Cruise, Tesla, to be able to tap into that network. And those are hardware companies that need to not only manufacture with their supply chain, but they also need auto OEMs to produce cars. So all of this takes time. Even Tesla with their new robotaxi Cybercab product, Elon announced it and said, hey, it might take till 2027 for this to roll out in any real scale. So I think it takes at least 2 to 3 years for us to see a huge impact on the Uber business model, but it's very promising. Uber is the only global network that can capture all of that demand and all of that supply together and bring them together in an operational logistics network. Most of these companies are hardware companies. They have never had to operate a 24/7 real-time service operation with customers, logistics, complaints, lost and found. Think of all of the work that has been laid in for 15 years at Uber. I think Uber stands to benefit from the explosion of autonomous vehicles and robotaxis.
So just like Tesla in the future might be, 2027 or whenever, might be an AV, EV, cybercab company, whatever, Uber might be that too sometime, but right now it's still a ride-hailing and food delivery business. And so I'm just wondering how you think about that sort of core opportunity at a time where, maybe that with seasonality or what have you, but where are you seeing the opportunity in that business?
Sure. It's a good question. So there's 2 areas of opportunity. So one, in terms of international, it's still largely untapped. They've started to make great inroads, and they're the only global company truly on both of those categories. So markets like India, markets like Southeast Asia, and even East Asia is currently low penetration. So North America, I think, is operating at a predictable clip, But I think Asia, Southeast Asia, and India, South Asia, are huge opportunities that eclipse the total size of even the North American market. The second area, and we talked about robotaxis and AV/EV and how Uber's positioned there. The other thing that's really interesting about their opportunities, Uber has historically been one of the largest real-time, real-world applications of AI ML in the world. So, the marketplace engine makes 10 million predictions per second on behalf of its drivers and riders and delivery couriers. At its core, it is a giant global prediction engine orchestrating all this movement. Now, have they tapped into generative AI and all the cost efficiencies and all the productivity benefits there? Not yet. It's a large-scale operation. They're starting to make those transitions. And when they transform, I think that the cost and the software-like scalability of the company will really come out. You're seeing today a 40% gross margin with a 10% operating profit margin. That's starting to look, that's transitioning into a software company. And so I think with generative AI and all of the work that they're putting in right now to transform their internal operations and their network across the world, I think that's the second or third area of opportunity for them.
Steve, just lastly here, do you think there's opportunity in acquisition? And I bring this up, obviously, because there's been in the rumor mill whether or not Uber will be a potential acquirer of Expedia, a company that sits at about $21 billion market cap right now.
Yeah, I don't know if Expedia is the most exciting potential acquisition. I think Uber is making investments in autonomy, in self-driving car technology around the world. I think auto OEMs are trying to figure out if they want to work with Waymo Driver and install Waymo Driver on their new cars, or if they want to try to go it alone, which is probably a really bad idea for any of the traditional auto manufacturers. Tesla is the only one that's been able to do that at any scale. So, I think there's a lot of opportunity back in technology. So I'd be very excited to see Uber start investing in technology companies that can accelerate their move into autonomous vehicles, into creating a higher margin car service, delivery service within their network. So I think those types of acquisitions are more interesting to me. And another area of acquisition, the FTC aside, and those approvals necessary for it, I really feel that the grocery category is adjacent, it's relevant, it plugs right into the network. I think something in that area would be very, very exciting and makes a lot of sense as a plug-and-play acquisition.
Interesting. Steve Jang, who is the founder and managing partner of Kindred Ventures. Steve, thanks so much for taking the time today.
Thanks for having me.
Certainly.